Welcome back to the Trading Psychology series. This is episode 6, and we're going to be talking about mastering self-discipline in trading. You might have the technical analysis down. You're studying charts, but something's still holding you back.
Yeah.
It could be that emotions are kind of getting in the way, or you're struggling to stick to your plan.
Mm-hmm.
We've all been there. And today we'll uncover why self-discipline is the key to unlocking your trading potential, and more importantly, how to actually develop it.
Yeah, trading is such a fascinating field where psychology plays as much of a role as, your technical skills. Imagine this, you have this powerful race car, top of the line, all the bells and whistles. But if you don't know how to handle it, all that power can lead to a crash. Self-discipline is that crucial driving skill that keeps you on track, helps you navigate those tricky turns, and ensures you reach the finish line.
Okay, so let's get specific. What does self-discipline in trading actually look like? It's got to be more than just resisting that impulse buy. Right?
Yeah. You're spot on. It's about cultivating that inner strength to execute your trading plan consistently.
Right.
No matter what chaos the market throws at you. Remember, the market is going to test you. There will be losses, there will be unexpected news.
Oh, yeah.
And there will be times when you'll want to just abandon shit.
So you're saying self-discipline is about having that mental fortitude to stick to my strategy, even when things get rough.
Exactly. Without it, you're essentially trading blindfolded. You're more susceptible to chasing those losses, jumping into trades just because of FOMO, that fear of missing out, and making impulsive decisions that can really damage your portfolio.
So in a sense, self-discipline is a form of self-protection.
Right.
Both for my capital and my sanity, right?
You got it.
Yeah.
It's about protecting your capital, yes, but also safeguarding your mindset. Constantly making emotionally charged decisions can trap you in a cycle of stress and frustration, ultimately leading to burnout. Trading should be empowering, not anxiety-inducing. You want to feel in control and confident in your decisions.
All right, so let's unpack some of these challenges to maintaining discipline. What are some things traders should be on the lookout for?
Managing emotions is huge. Trading is a roller coaster. You get the highs of winning trades, and then bam, the lows of losses hit you.
Yeah. It's so easy to let those feelings hijack your decision-making. I think that constant pressure to be winning really gets to a lot of people. I've been there myself.
Yeah.
It can really mess with your head if you let it.
Absolutely. And that ties into another challenge, those impulsive trades. We touched on FOMO, but there's also the temptation to chase losses.
Right.
You have a losing streak and suddenly you're trying to make it all back on the next trade, throwing caution to the wind.
Oh, well, let's not forget those distractions. News alerts popping up every second. The constant chatter on social media, self-proclaimed gurus promising guaranteed returns, it's overwhelming.
It's information overload, and it can easily pull you away from your carefully crafted plan and strategy. Then, of course, there are the inevitable setbacks, which are part and parcel of the trading journey.
Every trader faces losses at some point. It's not about avoiding them entirely, but about how you handle those losses, how you bounce back. That resilience is a key part of maintaining discipline.
Couldn't agree more. Without that resilience, those setbacks can really chip away at your confidence and ultimately your discipline.
So how do we start building this foundation of self-discipline? What are the essential building blocks?
It all starts with a rock-solid trading plan. Think of it as your trading constitution, your guiding light in the often chaotic world of the market. It outlines your strategy, your entry and exit points, risk management rules.
Right.
It's there to help you avoid making those impulsive decisions in the heat of the moment.
So having a plan is key. But then comes the real challenge, actually sticking to it right, especially when emotions are running high.
You're absolutely right. That's where routines and rituals come in. Develop a structured routine that gets you in the right headspace for trading.
So something like a pre-trading checklist to go through before I even look at the charts.
Precisely. This could involve reviewing your trading plan, analyzing the market, maybe even setting some daily goals.
Okay.
It's all about creating that sense of consistency and discipline before you even place your first trade. And don't underestimate the power of mindfulness and mental training techniques.
Yeah. I've been trying to meditate for a few minutes before each trading session, and I've definitely noticed a difference. I'm less reactive to those sudden market swings. Like I've got that buffer between my emotions and my decisions.
That's exactly what you want, training your mind to respond thoughtfully rather than react impulsively.
So we've got our trading planner routines and our mental game in check. What are some in-the-moment strategies when I'm fighting the urge to make an impulsive trade?
One of the most effective is simply hitting the pause button before you click buy or sell. Force yourself to pause, even if it's just for 30 seconds.
Give myself a timeout. I like it.
It's like a circuit breaker for your brain. Use that time to check in with yourself. Are you about to make a move based on your plan? Or are you being driven by fear, greed, or FOMO?
It's so easy to get caught up in the moment and react without thinking. That pause could be the difference between a well-considered trade and a costly emotional mistake.
Absolutely. And this is where having those predefined rules in your trading plan really helps.
Right.
Clear entry and exit criteria, risk management parameters. They remove the guesswork and further reduce the chance of emotional decision-making.
It's like having those boundaries already set, so I'm not scrambling to figure things out when the pressure is on.
Exactly. And then there are risk management tools that can provide some support. Stop-loss orders are a trader's best friend.
Because they automatically exit trades at a predetermined level.
Right.
So even if I'm not watching the market every second, I've got that safety net in place.
Precisely. It's like setting a safety valve on a pressure cooker. It helps you control your risk even when things get heated.
Okay, so we've talked about the mental and strategic side of discipline. But what about those parts of our lives that aren't directly related to trading? How can we extend discipline beyond the charts?
This is where it gets really interesting. Your trading performance is often a reflection of your overall well-being. Think of it this way. If you're neglecting your physical health, mental health, or time management, it's likely to show up in your trading.
It's all connected, just like we talked about earlier.
Exactly. Taking care of yourself physically is essential. Regular exercise, a healthy diet, those things can boost your focus, your energy levels, and your ability to handle stress.
It's like training for a marathon. You wouldn't fuel your body with junk food and expect to perform at your best.
I like that analogy. And then there's mental well-being. Stress and anxiety are discipline killers.
Oh, tell me about it. When I'm stressed out, I'm way more likely to make impulsive decisions, not just in trading, but in everything.
That's why it's important to find ways to manage that stress.
Right.
Maybe it's meditation, maybe it's journaling, or maybe it's just spending time in nature.
Finding that balance is so important.
Absolutely. And we can't forget about time management. Treat trading like a business. Schedule dedicated time for market analysis, trade execution review.
Creating that structure and professionalism helps me stay disciplined and focused on my goals.
Right. And all of this feeds into developing a balanced trading mindset, which is essential for a long-term success. Discipline is crucial, but you also need flexibility and adaptability.
Because markets change, and we have to be able to adjust our approach while staying true to those core principles. Right.
Precisely. It's about finding that sweet spot between sticking to your plan and being open to adapting when necessary.
So it's not about being rigid. It's about having that discipline to follow the plan, but also the wisdom to know when to deviate based on what the market's telling me.
You got it. Continuous learning is key. Markets are constantly evolving, so stay updated and be open to refining your strategies as you gain more experience.
I'm always trying to learn something new, refine my approach, keep things fresh.
That's the spirit. And that brings us to another crucial element, patience. In trading, less is often more.
That's tough to remember.
I know.
When you're eager to jump in and start making trades.
But trust me on this. Wait for those high probability setups that align with your plan. Resist chasing every market move. Remember, trading is a marathon, not a sprint. Focus on consistent execution on making quality decisions, and the profits will follow.
It's about trusting the process, trusting my strategy, and having the patience to see it through.
Exactly. It's about understanding that sustainable success in trading doesn't come from quick wins. It comes from developing that unshakable inner discipline. That allows you to navigate the markets with confidence and composure.
That's a great point. We've covered a lot here. But it's clear that self-discipline is multifaceted. It takes effort and constant attention. But it's achievable for anyone who's willing to put in the work.
Absolutely. Self-discipline isn't some magical trait that some people have and others don't. It's a skill, and like any skill, it can be learned, practiced, and honed over time.
It's about understanding the psychological challenges we face as traders, coming up with strategies to overcome those challenges, and building a holistic approach to discipline. That discipline needs to extend beyond the trading screen and into our everyday lives.
That's the key. It's those small, consistent choices we make each day that ultimately lead to that unshakable inner discipline. That sets successful traders apart.
So for everyone listening, as you continue on your trading journey, remember that mastering self-discipline is a journey in itself. There will be times when you slip up, when emotions get the better of you, when you question your every move. It happens to all of us.
It happens to the best of us.
The key is to acknowledge those moments, learn from them, and keep moving forward.
Right. Don't beat yourself up over mistakes. Instead, view them as opportunities to refine your approach and strengthen your resolve. The more you practice self-discipline, the more ingrained it becomes in your trading habits. And ultimately, it's that consistent self-discipline that leads to consistent results.
Well said. Let's take a quick pause, and when we come back, we'll dig deeper into some specific strategies and techniques that can help you solidify your self-discipline and take your trading to the next level.
Welcome back. Let's talk about something every trader faces at some point, those slumps.
Yeah.
Those periods where it feels like nothing is going your way, like you've suddenly lost your trading mojo.
It's incredibly frustrating. You're putting in the work, you think you're doing everything right, but the results just aren't there. It can really shake your confidence.
And that's where your self-discipline is truly tested, when you're in a slump. It's so tempting to abandon your plan, chase those losses, or make impulsive trades out of desperation.
So what causes these trading slumps? Is it just bad luck, or is there something more to it?
It's rarely just bad luck. There are usually several factors at play.
Okay.
Sometimes it's a shift in market conditions. Strategies that were working perfectly fine might suddenly become less effective.
Right.
Volatility changes trends, reverse liquidity, dries up the market is a dynamic beast.
So it's not necessarily that I'm doing something wrong. It's that the market environment has shifted and my approach needs to adapt.
Exactly. Other times it's more internal stress over confidence from past wins, even personal challenges outside of trading.
Well,
Can cloud your judgment and lead to poor decisions. It's like that saying, when it rains, it pours. Sometimes life throws curveballs that impact our mindset even if we don't realize it.
that makes a lot of sense. And I know I've been guilty of this overtrading when I'm in a slump. You have a string of losses and you just want to make it back quickly, but that often leads to even more mistakes.
It's a natural reaction, but it's a trap. That urge to fix the situation quickly often makes things worse. Sometimes a slump is a sign that your trading strategy needs some tweaking.
Right.
Maybe it's no longer aligned with the current market conditions. Or perhaps you've developed some bad habits that need addressing.
So rather than seeing a slump as a failure, it could actually be an opportunity to step back, evaluate, and refine my approach.
Precisely. It's a chance to learn and grow as a trader. But navigating a slump without losing your discipline is critical. If you let those negative emotions take over, it can easily spiral into more poor decisions and further losses.
Okay, so I'm in a slump. What are some practical steps I can take to stop that downward spiral and get back on track?
The first and most important step is to hit pause. Take a break from trading for a day or two. Give yourself some space to clear your head and avoid making rash decisions in the heat of the moment.
I've heard that compared to hitting the reset button. Sometimes you just need to step away to gain some perspective.
Exactly. And use that time to reflect on your recent trades. Were they consistent with your plan?
Okay.
What could you have done differently? Remember, it's not just about the outcome of the trades, but the process, the decision-making that led to those outcomes.
Even a losing trade can be a learning experience if I analyze it with the right mindset.
Absolutely. Once you've reflected, take a deep dive into your trading strategy. Review your trading journal. Are there patterns in your behavior during the slump? Any recurring mistakes or deviations from your plan? This is about identifying weaknesses so you can address them head-on.
So I'm looking inward at my own decision-making process. But should I also be looking outward at the market?
Definitely. Check if market conditions have changed significantly. Maybe your strategy needs adjustments to adapt to the current environment. It's a two-pronged approach, looking inward at your decision-making and outward at market dynamics. And while you're doing this analysis, consider reducing your position sizes.
Lowering my risk.
Exactly. Lowering your risk during a slump can take some emotional pressure off and allow you to regain confidence in smaller steps.
That makes sense. When you're in a slump, every loss feels magnified. Minimizing my risk would definitely help me weather the storm.
It's all about managing the psychological impact of the slump so you can make more rational decisions. But most importantly, reconnect with your trading plan. Remind yourself why you created it, what your long-term goals are, and what your strategy is designed to achieve.
Getting back to basics, to those core principles that guided me before the slump set in. It's like reaffirming my commitment to disciplined trading.
You got it. And remember, getting through a slump is as much about mental strength as it is about technical analysis. It's about having the discipline to stick to your process, even when it feels like the universe is conspiring against you.
That's where those strategies for regaining discipline that we talked about earlier come into play, right? Like focusing on the process, not just the profits.
Exactly. It's easy to get caught up in recovering losses quickly, but that often leads to more impulsive decisions.
Right.
Instead, focus on executing each trade correctly, following your plan, and managing your risk. The profits will come as a natural byproduct of consistent disciplined trading.
It's about trusting the process, even when the results aren't immediately apparent. Do you have any tips for staying motivated during a slump? It can be hard to stay positive when it feels like nothing is working.
Setting small, achievable goals can be incredibly helpful. Instead of trying to climb out of the slump all at once, break it down into smaller, more manageable steps.
So instead of saying, I need to make back all my losses this week, I might say, I'm going to focus on taking only high probability trades that meet my criteria today.
Exactly. It's about setting yourself up for success by focusing on those small wins. That will gradually build your confidence and help you regain your momentum. It's like building a house brick by brick. You start with a solid foundation and gradually work your way up.
That's a great analogy.
Yeah.
I also find it helpful to revisit my past successes when I'm struggling. Looking back at those winning trades reminds me that I'm capable of trading profitably, that my strategy works, and that the slump is just a temporary setback.
That's a great technique. It's a way of boosting your confidence and reaffirming your belief in your abilities as a trader. Another helpful tip is to create a specific plan for handling slumps.
So like a slump survival guide.
Exactly.
Yeah.
Outline those specific steps you'll take when you find yourself struggling. Reduce position sizes, take fewer trades, review your trades more frequently, or maybe even seek feedback from a mentor or your trading community.
It's like having that game plan in place. So I'm not caught off guard when the inevitable slump arrives. And don't forget those mental conditioning techniques we talked about earlier, like mindfulness or affirmations. They can really help you stay calm, focused, and positive, even when the market is testing your resolve.
Absolutely. Trading is a mental game as much as it is a technical one. If you're not in the right headspace, it's going to affect your decision-making.
It's about training my mind to respond to challenges constructively rather than letting those negative emotions take over. So it sounds like the key to getting through a slump is to view it as a learning opportunity rather than a failure.
Precisely. By analyzing your behavior, the market dynamics, and your strategy during a slump, you gain valuable insights.
Okay.
These insights can strengthen your trading discipline and make you a more resilient and adaptable trader. It's like going through a rigorous training program. It's tough in the moment, but it makes you stronger and better prepared for future challenges.
So for anyone listening who's currently in a slump, take heart. It's not the end of the world. It's an opportunity to learn, grow, and come back stronger.
Remember, every successful trader has faced and overcome slumps. It's a natural part of the trading journey. The key is to use those experiences to refine your approach, strengthen your discipline, and come back stronger than ever.
I love that perspective.
Yeah.
Now, let's talk about something that can really sabotage discipline distractions.
Yeah.
In today's hyper-connected world, they're everywhere.
We're constantly bombarded with information, notifications, opinions, all vying for our attention, and it's so easy to get pulled away from our trading plans, especially when the market is moving quickly and our emotions are running high.
Managing distractions is a real struggle for me. It's like trying to stay focused on my trading plan while
Yeah.
juggling a dozen different things at the same time.
It's a challenge for everyone, but managing those distractions is crucial. For maintaining that laser focus, we need to execute our strategy effectively and make disciplined decisions.
Okay, so let's break down this challenge. Where do these distractions come from, and how can I manage them more effectively?
Well, one of the biggest sources of distraction is information overload. We're constantly bombarded with news updates, social media feeds, market commentary from countless sources.
Oh, yeah.
It's like trying to drink from a fire hose.
I can definitely relate to that feeling.
All that noise can cloud your judgment.
Yeah.
And lead to impulsive decisions. We might get caught up in the hype of the latest hot stock or panic sell based on a news headline without really thinking it through.
It's like reacting to the market instead of responding to it in a thoughtful, strategic way.
Right. And then there's the danger of market noise. All those random fluctuations, upswings, downswings, sudden spikes, it's easy to get caught up in those movements and lose sight of the bigger picture. It's like getting lost in the weeds instead of focusing on the forest.
That's a great way to put it. And then there's social media. It can be a great way to connect with other traders, but it can also be incredibly distracting and even misleading.
Absolutely. It can be a breeding ground for misinformation, herd mentality, emotional contagion. You might start second-guessing your own plan just because you see others doing something different, even if your plan has been working well for you.
So it sounds like the key to managing distractions is to be very intentional about the information that I consume. I need to develop those filters so I'm not constantly bombarded with irrelevant or unreliable data. But how do I actually create those filters and manage those distractions?
One of the most effective strategies is to be ruthless about curating your information sources.
All right.
Subscribe only to news sources and market commentaries that you find truly valuable and insightful. Unsubscribe from anything that's just adding to the noise or triggering those emotional reactions.
That makes sense. And the same goes for social media, right? Be
Yeah.
very selective about who I follow and what groups I engage with.
Exactly. If you find that certain accounts or communities are constantly triggering your FOMO or negativity, it's time to unfollow or mute them. It's about creating a positive and supportive online environment that reinforces your disciplined trading mindset.
Okay, so I've curated my information sources. What else can I do to create a more focused trading environment? I don't have a dedicated home office, so I'm often trading from my kitchen table.
Even without a dedicated office, you can designate a specific space for trading, a quiet corner where you can minimize distractions.
Okay.
It could be a corner of your bedroom, a spot at the library, anything that helps you create that sense of focus and professionalism.
It's about setting those boundaries between my trading life and the rest of my life,
Yeah.
even if it's just a mental boundary. I've also found that noise-canceling headphones can be really helpful for blocking out distractions.
Those are great. Simple things like that can make a big difference.
Yep.
Another tip is to set specific trading windows.
Correct.
Identify those times of day when you're typically most focused and alert, and commit to trading only during those periods.
I'm definitely a morning person.
Yeah.
So I try to get all my trading done before lunch when I know I have the most mental clarity.
That's smart. And during those trading windows, be ruthless about minimizing distractions. Turn off your phone and close unnecessary tabs on your computer. And let your family know that you're not to be disturbed.
Treat it like any other important meeting or work task. No interruptions allowed.
Exactly. And just as you have pre-trading routines to get you in the right headspace,
Right.
you can also develop pre-trade rituals to help you eliminate distractions and get into that zone of focus.
So things like meditation, deep breathing exercises, or reviewing my trading plan.
Exactly. Anything that helps you clear your mind, center your focus, and transition into that trading mode where you're fully present and engaged with the market. It's about creating that mental separation from the distractions of everyday life and stepping into that space of discipline and focus.
That makes a lot of sense. It's like those athletes who have those pregame rituals to get them in the zone. We can apply the same principles to trading. I'm also curious to hear your thoughts on technology. It's the source of so many distractions, but it can also be a powerful tool.
You're right, technology is a double-edged sword. It's all about using it strategically to support our goals rather than letting it control us.
Right.
For example, we can leverage automation tools to manage our trades, which can reduce the need for constant monitoring and free up our mental bandwidth to focus on the bigger picture.
So things like setting stop-loss orders, take profit orders,
Wow.
or even using trading algorithms to execute trades based on my predefined criteria.
Exactly. These tools can take some of the emotional pressure off and help you stick to your plan. Even when you're not actively watching the market, it's like having that autopilot engaged, so you can focus on the strategic aspects of trading.
I've been experimenting with some of those tools, and it's amazing how much mental energy it frees up. I'm less stressed, more focused, and I'm actually making better decisions.
That's great to hear. There are also apps and browser extensions that can help track your screen time and block distracting websites during your trading sessions.
Okay.
It's like having that digital accountability partner to keep you on track.
I'll have to check those out. And one last thing. Something as simple as disabling non-essential notifications can make a world of difference.
Absolutely. Silence those email alerts, social media pings, and news updates that are constantly popping up on your phone and computer. It's about reclaiming your focus and your attention so you can direct it toward your trading goals.
It's about being in control of the information flow rather than letting it control me. When I'm able to minimize those distractions, my discipline skyrockets. I'm making clear-headed decisions that are in line with my plan and my long-term goals.
That's the power of managing distractions. You create the conditions for discipline to thrive.
Great points. So for everyone listening, remember that managing distractions is an ongoing battle. But by being aware of those triggers, developing strategies for filtering information, and creating a focused trading environment, we can win that battle and set ourselves up for success. Now let's talk about another challenge that can really derail our best intentions. Those impulsive trades.
Those moments where we get caught up in the heat of the moment and throw our plan out the window, chasing a quick profit or trying to make up for a recent loss.
Oh yeah.
We've all been there, and it can be incredibly costly.
Impulsive trades are my Achilles heel. It's that emotional side of trading taking over. And it's got me into trouble more times than I care to admit.
It happens to the best of us. Impulsive trades are often driven by fear, greed, or FOMO, and rarely lead to positive outcomes.
So let's delve into the psychology behind impulsive trading and explore some strategies for resisting those urges and staying disciplined.
Impulsive trades are essentially trades that we make without a clear plan or strategy.
Okay.
They're driven by knee-jerk emotional reactions rather than thoughtful analysis.
It's like I'm on autopilot just reacting to the market's movements
Yeah.
instead of making conscious, deliberate choices.
Exactly. And several scenarios can trigger these impulsive trades. One of the biggest culprits is FOMO, the fear of missing out.
That feeling that everyone else is making money except for you. So you need to jump into the market right now, regardless of whether it aligns with your plan.
Precisely. And it often leads to buying high and selling low, which is the exact opposite of what we want to do as traders.
It's like I'm chasing the market instead of letting the market come to me.
Right. Then there's revenge trading, another classic trap. After experiencing a loss, we might feel this urge to immediately get back into the market
Oh, yeah.
and try to win back what we lost.
It's that emotional reaction to a setback, that desire to fix the situation quickly, which can lead to even more impulsive decisions and further losses.
Exactly. And sometimes impulsive trading is driven by overconfidence. We might experience a streak of winning trades and start to think we're invincible,
Right.
leading us to take on more risk than we normally would or deviate from our plan in search of those bigger wins.
It's like we're getting ahead of ourselves, letting those successes go to our heads, and forgetting that the market can humble us very quickly.
Right. And then there's the simple fact that markets are designed to trigger our emotions. They're full of upswings and downswings, sudden spikes and crashes,
Oh, yeah.
all designed to elicit those fear and greed responses. That can lead to impulsive trading.
It's like a psychological battleground out there.
Okay.
And we need to be prepared for those emotional attacks.
Absolutely. Understanding the psychology behind impulsive trading is the first step in learning to resist those urges. We need to be aware of those emotional triggers,
Okay.
the FOMO, the revenge, trading the overconfidence, and develop strategies for counteracting them.
So it's about awareness, about recognizing those moments when I'm about to make an impulsive trade and having a plan in place to interrupt that pattern.
You got it. Once we understand those triggers, we can start to put those guardrails in place, those
Okay.
mental barriers that prevent us from making those rash decisions.
Okay, so let's dive into some practical strategies for resisting those impulsive urges. What are some things I can do in the moment to stay on track?
One of the simplest but most effective techniques is to simply pause before acting. Before you click that buy or sell button, force yourself to take a few deep breaths. Step away from the screen for a moment and ask yourself a few key questions.
So it's like that timeout we talked about earlier for handling slumps. Give myself a chance to cool off and assess the situation more objectively.
Exactly. Give yourself that mental space to detach from the emotional heat of the moment and evaluate things more rationally. Ask yourself, does this trade align with my plan?
Okay.
Am I acting out of fear, greed, or FOMO? What's the logical rationale for taking this trade?
It's about engaging that rational, analytical part of my brain and overriding that impulsive emotional response.
Right. And this is where having those predefined rules in your trading plan comes in handy. Clear entry and exit criteria, risk management parameters, position sizing guidelines.
Right.
They take the guesswork out of the equation and help you avoid making those emotional decisions when the pressure is on.
It's like having that set of rules already laid out, so I'm not trying to figure things out in the heat of the moment.
Exactly. And remember those risk management tools we talked about, like stop loss orders? They can really help here.
They act as that safety net, limiting my potential losses, even if I do make an impulsive trade.
Exactly. They're like that safety valve on a pressure cooker, preventing things from blowing up even when the heat is on.
So it's a multi-layered approach, pausing before acting, having those predefined rules in place, and using risk management tools to mitigate the damage of those impulsive trades.
Right. It's also essential to recognize those emotional states and external situations that tend to trigger impulsive trading for you.
Because we all have those weaknesses, those vulnerabilities that the market can exploit if we're not careful.
Absolutely. Maybe you tend to get more impulsive after a string of losses, or when the market is volatile, or even when you're feeling stressed or fatigued.
So it's about knowing my triggers, being self-aware, and having a plan to handle those situations.
Exactly. If you know you tend to get more impulsive after a loss, maybe you take a break from trading, reduce your position sizes, or focus on analyzing your mistakes, rather than trying to win back your losses immediately.
It's about having those coping mechanisms in place, those strategies for dealing with those high-pressure situations.
Right. And another critical strategy for resisting impulsive trades is to focus on probabilities, not outcomes.
Because in trading, there are no guarantees.
Yes.
Every trade has a chance of success and a chance of failure.
Exactly. We can't let the outcome of a single trade dictate our emotional state or our future decisions. If we do that, we're letting the market control us instead of us controlling our trading.
I've definitely fallen into that trap before, letting a single win or loss completely throw me off my game.
It happens, but we need to approach each trade as part of a larger probability game, understanding that there will be wins and losses along the way. But as long as I'm sticking to my plan and managing my risk, those fluctuations will eventually even out.
Exactly.
It's about trusting the process even when the short-term results aren't what you hoped for.
It's about developing that unshakable discipline that allows me to navigate the markets with confidence, regardless of the outcome of any single trade.
Well said. So for everyone listening, remember that resisting impulsive trades is a skill that takes practice and self-awareness. Every time you successfully resist that urge to jump into a trade without a plan, you're strengthening those discipline muscles and moving one step closer to your trading goals.
It's about building those good habits one trade at a time.
Exactly. And as you develop those habits, you'll find that your trading becomes more consistent, less stressful, and ultimately more rewarding. Now let's shift our focus to how we can extend that discipline beyond trading and into our everyday lives.
Because trading doesn't exist in a vacuum, right? It's influenced by all these other aspects of my life. My physical health, my mental well-being, my finances, how I manage my time.
You're absolutely right. And when we're disciplined in those other areas of our lives, it naturally spills over into our trading.
So it's a holistic approach. It's about taking care of myself as a whole person, not just as a trader.
Exactly. Let's start with physical health. When we exercise regularly, eat a healthy diet, and get enough sleep, we're providing our brains and bodies with the fuel they need to perform at their best.
It's like giving my trading engine a tune-up.
I love that analogy. Even a 30-minute walk each day can do wonders for reducing stress, improving focus, and boosting those feel-good endorphins that make it easier to handle the ups and downs of trading.
And a healthy diet provides those essential nutrients that my brain needs to function optimally. And sleep. I'm definitely a better trader when I'm well rested.
Right. And just as physical health is crucial, so is mental well-being. When we're stressed, anxious, or overwhelmed, it's going to impact our decision-making.
Oh, yeah.
In all areas of our lives, trading included.
It's like trying to trade with a fogged-up windshield. You just can't see clearly.
Exactly. So it's crucial to incorporate stress-reducing activities into our daily routines. Things like meditation, mindfulness practices, journaling, or spending time in nature.
I've been trying to meditate more regularly, and it's amazing how much it helps me calm those racing thoughts and regulate my emotions.
That's great to hear. Those practices can make a big difference in your trading. And then there's time management, a skill that's essential for success in any endeavor, but especially in trading.
Because if I'm not intentional about how I spend my time, it's easy to get sidetracked, procrastinate on important tasks, or feel completely overwhelmed.
You're absolutely right. We need to treat trading like a business, scheduling dedicated time for market analysis, trade execution review, and all those other tasks that contribute to our success.
It's about creating that structure, that sense of order and discipline that allows me to allocate my time effectively and avoid those last-minute scrambles that can lead to mistakes.
Right. And finally, we can't forget about financial discipline. When our personal finances are in order, it takes a lot of the pressure off our trading.
Because if I'm constantly worried about paying bills, it's going to be tough to approach trading with a clear head. That financial stress can definitely lead to impulsive decisions.
Exactly. So it's important to develop those habits of saving, budgeting, and managing debt responsibly.
Financial stability creates that peace of mind that allows me to trade with more confidence and clarity.
Exactly. So as we can see, extending our discipline beyond the trading screen isn't just about improving our trading performance. It's about creating a more balanced and fulfilling life overall.
It's about developing those habits and mindsets that support our well-being in all areas. Making us more resilient, more focused, and more likely to achieve our goals.
Precisely. It's about recognizing that our trading journey is intertwined with our personal journey. And when we cultivate discipline in all areas of our lives, we create that virtuous cycle that propels us towards success.
Well said. Let's take a quick break, and when we come back, we'll continue exploring self-discipline, diving deeper into strategies and techniques that can help solidify your mindset and take your trading to the next level.
Welcome back. We've been unpacking the critical role of self-discipline in trading, and I'm eager to delve into a quality that's often overlooked: but incredibly powerful. Patience. Patience is truly an unsung hero in the world of trading. It's that discipline to resist chasing quick wins
Right.
or forcing trades that just aren't there.
It's so easy to get caught up in the excitement, the adrenaline rush of the market, and forget that trading is a long game. It's a marathon, not a sprint.
You're absolutely right. Patience is about adopting that long-term perspective,
Okay.
focusing on consistent execution and risk management, not letting those short-term market swings throw you off course.
Well, let's talk about the concrete benefits of patience and explore some strategies for cultivating this essential quality in our trading.
One of the most significant advantages of patience is that it dramatically improves trade selection. When you're patient, you're not jumping into every trade that looks tempting.
Right.
You're waiting for setups that meet your specific criteria.
Okay.
Setups that have a higher probability of success based on your analysis and strategy.
It's about being selective, waiting for those opportunities that truly align with my plan and my risk tolerance, rather than chasing every market move or reacting to every news headline.
Precisely. Think of it like a sniper patiently waiting for that perfect shot, rather than spraying bullets randomly hoping to hit something.
Okay.
Patience also enhances our risk management.
That makes sense. When I'm patient, I'm more likely to stick to my predetermined stop loss and take profit levels, not getting swept up in the emotions of the moment.
Exactly. You're not letting fear or greed dictate those levels. Your plan is in control, which helps you protect your capital.
Right.
And patience supports your long-term goals.
I'm starting to see how all these elements we've been discussing connect and reinforce each other. It's not just about isolated tips and tricks, but about creating this overall mindset that's conducive to success.
You've hit the nail on the head. Patience frees you from being fixated on quick wins or trying to get rich quick. It's about understanding that trading is a journey.
Right.
And patience allows you to enjoy the process of continuous improvement, rather than getting caught up in the outcome of every single trade.
So how do I actually cultivate patience in my trading? It's easy to talk about, but in the heat of the moment when the market's moving fast, my emotions can take over.
You're not alone in that. It's a skill that requires conscious effort and practice.
Okay.
One powerful technique is to reframe waiting as part of your plan.
So instead of viewing waiting as passive, I need to see it as an active choice, an essential part of my trading strategy.
Exactly. It's about understanding that sometimes the best trade is no trade at all. It's about having the discipline to say, this setup doesn't meet my criteria, so I'm going to wait for a better opportunity.
Okay.
And setting alerts for key levels can be a game changer here.
Instead of constantly staring at the charts waiting for something to happen, I can set those alerts and let the market come to me. It frees up my time and mental energy to focus on other things.
You got it. It's about being proactive rather than reactive. Another key strategy is to focus on quality over quantity.
It's not about how many trades I take. It's about how well I execute the trades that I do take.
Precisely. It's about being selective, waiting for those high probability setups that align with your plan, and then managing those trades with discipline and precision.
Okay.
Remember, less is often more in trading. Sometimes the most profitable thing you can do is simply sit on your hands and let the market do its thing.
That's a tough one, but I know it's true. It's about having the confidence to trust my strategy and the patience to let it play out.
Another powerful technique is to review your past trades, not just to identify mistakes, but to analyze your emotional state when you made those decisions.
So I can spot those patterns of impatience that might have cost me money in the past.
Exactly. You might see trades where you jumped in too early, exited too late, or chased a loss because you're feeling impatient or frustrated.
Right.
Use those insights to make better decisions in the future.
It's about understanding the link between my emotions and my trading performance, then using that knowledge to strengthen my discipline.
That's the key. And mindfulness can play a significant role here. It helps us become more aware of our thoughts and feelings in the present moment without judgment.
I've found that mindfulness helps me create that pause, that space between a thought or feeling and my reaction to it.
Exactly. That awareness allows you to observe those impulsive urges, those feelings of FOMO or frustration, without immediately reacting to them.
Okay.
It's like creating that pause button that allows you to make conscious, deliberate choices. That's the essence of patience in trading.
It's about choosing my actions, not letting my emotions control me. This has been incredibly insightful. It's clear that patience isn't just a trading skill, it's a life skill.
You're absolutely right. When we cultivate patience in our everyday interactions, in our relationships, and our work, it naturally flows into our trading.
It's about developing that inner peace and stillness that allows us to navigate the challenges of trading and of life with more grace and composure.
Well said. It's a journey worth taking because the rewards of patience in trading and in life are immeasurable.
As we wrap up this episode on mastering self-discipline, I want to thank you for sharing your insights and expertise. It's been an incredible learning experience.
It's been my pleasure. Remember, self-discipline is not a destination, it's a journey. It's an ongoing process of self-discovery, growth, and refinement. The more you invest in developing your discipline, the more rewarding that journey will become.
To everyone listening, keep practicing, keep learning, and keep striving towards that mastery of self-discipline that will ultimately lead you to success, not just in the markets, but in all areas of your life. Until next time, happy trading.